Good evening, everyone, and thank you for listening to the Futurati Podcast, where we dive into how emerging technologies will impact the world and your bank account. I'm Trent Fowler, and joining me, as always, is my host, Thomas Fry. Thomas and I are futurists, keynote speakers, and consultants with decades of experience in analyzing trends and communicating new developments to audiences across the world. Reach out to us at futuratipodcast.com/contact-futurati if you'd like to hire us for consulting, to speak at your event, or to advertise on our podcast. Thomas, we just wrapped up a really, really fun interview with Dr. Andrew Bailey, who is a philosopher and author who, along with two other gentlemen, has a book coming out soon called Resistance Money. Let me get the subtitles. Philosophical Case for Bitcoin, I think. But anyways, it's called Resistance Money. Yes, a philosophical case for Bitcoin. You should all buy it. He said it comes out a week and a day from June 5th, which is when we're recording this. But you should definitely buy it. And the pre-orders matter too, I'm told. I've never sold a book that way, but I'm told that pre-ordering it does actually help a lot. So consider pre-ordering it. If failing that, buy it when it comes out. But it was fantastic. Thomas, what did you get out of the conversation? What are your high-level takeaways?
Yeah, he approached this whole topic in a different manner than virtually anybody else I've heard talk about Bitcoin. He's very succinct with his answers and has this whole philosophical perspective on things, and I just absolutely loved it.
Yeah, 100% agree. He's first very likable. We were talking about that before we started recording. He has very succinct answers to questions, like really no matter where we went, like even at the end when we started getting into metaphysics and the problem of universals and epistemology and stuff, he just had really clear answers. You could just tell that he's a very sharp guy. He does his research, and he says that he actually described it as an academic monograph, not a book per se. And it's extraordinarily rigorous. He says there's 500 footnotes in the end that you can use to dig far deeper into all of these subjects.
Yeah, pretty well. Even with Resistance Money, one of the accolades from Michael Saylor is that this is a very well researched and thoughtful literary achievement, and that came out loud and clear with this interview.
Yeah, I thought so too. So without further ado, we will let you assess the literary merit of our conversation with Dr. Andrew Bailey. Tonight, we're joined by Dr. Andrew M. Bailey. Dr. Bailey is an interdisciplinary teacher and scholar whose work spans philosophy, politics, and economics. He is a professor of humanities at Yale-NUS, which is in Singapore, and he's the co-author of the upcoming book, Resistance Money, A Philosophical Case for Bitcoin. If you enjoyed this interview, please subscribe to the podcast and share it with your friends. And don't forget to check out our website, futuratipodcast.com. Andrew, thanks so much for coming on the show.
Thank you, guys. It's a pleasure.
Let's hear a little bit about your background, your interests, and what brought you to working on the problems that you're working on today.
I'm a philosophy professor at a small college in Singapore, Yale-NUS College, jointly founded by Yale from the United States and the National University of Singapore here in Singapore. And I teach across a variety of disciplines that intersect with philosophy, including economics and politics. And it's really that intersection of those three that's captivated me as a teacher and of late as a researcher as well. So that's probably what brings us together, is that research has led me to, with my team of co-authors, write a book about Bitcoin and its role in the world and in our future.
What is a little bit of your background with Bitcoin? How did you get into it? Did you immediately see its promise, or like most of us, did you kind of futz around for a couple of years before you finally grasped it?
Oh, I futzed around for a good long while. I first bought Bitcoin and started using it just as a kind of speculative plaything, but also as a internet money to buy random stuff when I could, over a decade ago. And it took me a long time to see that it was more than this. Maybe it wasn't until 2019 that light bulb started to come on, but then what really brought it to fore in my mind was COVID, those early months of 2020. Seeing authoritarian crackdown and the rise of these powerful institutions that have the power to censor or block transactions, information, was kind of distressing. So it really led me and my team of co-authors that were starting to coalesce at the time to resistance technologies. How can people fight back in the face of overstepping corporations or states? And of course, Bitcoin we came to see as one answer to that question. Of course, not the only one. There are other resistance technologies, but this was an increasingly important one to us.
Yeah, can you explain what you mean by resistance?
Here is a conflict basically as old as human beings are, which is between individuals and institutions. There are groups of people that have aims and rules, and then there are individuals, and sometimes they conflict. And resistance technology, I think of as bits of technology that allow individuals or give them asymmetric advantages against collections of people. So, for example, a personal firearm. This is a way for a small group of people or even just one individual to resist, to fight back against the collective. Now, of course, resistance isn't always good and isn't always bad. It depends what you're resisting. When you're resisting something that's good, well, that's bad. When you're resisting something that's bad, well, that's good. So you can think of the personal firearm as an example of that. Maybe the printing press is another famous example from history that empowers one individual or a small group of people to have asymmetric advantages over even nation states. Once they start printing those books and spreading ideas at very low marginal costs, they can change hearts and change minds at a world historical scale. So that's the general phenomenon of resistance technology. Maybe some more contemporary examples that might be interesting include end-to-end encrypted messages, as when you send somebody a note on Signal and nobody else can read it except the intended recipient. Tor, Tor, the onion router, which allows you to anonymously browse the web, and Bitcoin, which allows you to transmit value over the internet without the permission of trusted authorities like banks or financial regulators.
It's like a Second Amendment for money.
Or first, or both, or something new entirely. It's all of that plus the Fourth Amendment too, I think.
First, Second, and Fourth Amendments for money. First, Second, and Fourth Amendments. Although that doesn't roll off the tongue as well. I feel like Second Amendment for money would be a pretty good book title, but First, Second, and Fourth Amendment for money.
And the third, if I recall correctly, is no quartering of soldiers.
No quartering.
So not that one. So we got to skip the third. Yeah. The first couple, I just called the Bill of Rights for money to be cover your bases.
Monetary Bill of Rights. I like, yeah, that's
there we go.
That's also a pretty good one. So I wanted to start with kind of an obvious place. I'm glad you answered my initial question that way and you framed it around resistance because you have a forthcoming book called Resistance Money. And its subtitle is A Philosophical Case for Bitcoin. I think a lot of people would be surprised to learn that Bitcoin is even the kind of thing that would need a philosophical case. What would you say to those people? What does philosophy offer Bitcoin or vice versa?
One thing philosophers do is help us think about ideas across disciplinary boundaries. And so for that reason, sometimes people call philosophy not an academic discipline, but instead an academic interdiscipline. So to see the contrast here, think of what you do when you're doing physics. You use only a narrow range of evidence. It's certain kinds of math, theoretical results, and then certain kinds of experimental or observational results. And that's it. So it's very narrow. Biology, similarly, you study only a certain kind of organism or a certain kind of life. Mathematics, you only use a certain kind of proof, namely a mathematical proof that's abstract, that deals with numbers and logical space and so on. But what about if we wanted to know what the world was like or what should be the case, given all of the evidence from the study of human beings, from the social sciences, from the study of our hearts and minds, the humanities, literature and music and that kind of thing, and to the study of the material world, physics, chemistry, mathematics, and so on. Well, philosophy is the place where all of that comes together. And this, in part, is why philosophy is so hard, because instead of just having a narrow evidential base from which we reason and draw our conclusions, we're trying to do it from everything all at once. So, of course, in a way, philosophy is impossible, but it's also irresistible and important because we actually care what's true given everything we know, not just some narrow range. Now, what does this have to do with Bitcoin? Here's how I think of things. Bitcoin is a piece of technology. It unites cryptography with some software engineering. So it's obviously a piece of technology. It's political technology in this sense. It has ramifications for the powers of institutions and the people to resist, individuals especially, to resist those powers. So it's political technology. And then it's aimed at certain things, and it accomplishes things that are either valuable or disvaluable. And that is the realm of ethics, or what, not just what is, but what should be. So as I see things, Bitcoin is one of these weird intersections in a very complicated Venn diagram. And it's precisely at those intersections that philosophy can help us sort things out, help us see the general categories that are at play, help us draw from the different kinds of evidential bases that are used in different academic disciplines, and put it together into a framework that actually makes sense. So that's one thing we attempt to do in the book, is to provide a philosophical framework that allows us to draw from economics, from politics, from empirical results, and from study of the technology itself, computer science and cryptography, and to bring it together to make a comprehensive case for Bitcoin being good for the world.
Yeah, can you talk a little bit more about the economic conditions, the whole banking collapse that was happening in 2008 that kind of led to Bitcoin, and why that kind of feeds this whole resistance thinking?
Hello, this is Trent Fowler, co-host of the Futurati podcast. One of the most common pieces of marketing advice I've come across is to know your audience and give them what they want. One difficulty in podcasting is that it's actually pretty hard to do this. None of the major platforms give us any way to reach out to you, our listeners, to find out what you enjoy about the Futurati podcast and what you'd like to see done differently. So we've decided to record this commercial and ask you directly to reach out to us. Head over to futuratipodcast.com, go to the contact page, and drop us a line. Tell us about your favorite and least favorite episodes, what you'd like to see us cover in the future, and anything else you want us to know. We produce this show for you, and we want your advice so we can make it even better. Thank you.
Central banks are sometimes very well behaved. So also for our centralized financial institutions and for their deputized partners, commercial banks and people who create financial assets and loan them out, etc. But occasionally, they're very, very bad. Now, the United States has been largely insulated from the worst behavior on the part of these centralized financial institutions, central banks, commercial banks, and so on. But occasionally, they mess up big time. 2008 is a great example of that. So in late 2008, there's the great financial crisis. And from what Satoshi Nakamoto, the pseudonymous inventor of Bitcoin, has said, he was actually already writing the code about a year and a half before then. So I don't think that the great financial crisis led to the creation of Bitcoin, but I think it did lead to the spark that allowed Bitcoin to grow from this tiny little thing into a prairie fire. And the spark is just this dissatisfaction with these central institutions and their capacity to really mess things up when we give them too much power. So if you just charted this over time, American satisfaction with financial institutions, it sort of hums along, and then 2008 hits, quarter four 2008, it just goes to zero. And that's the condition that makes the world ripe for a monetary asset and system that is apart from their power and their ability to control it. And that's just Bitcoin. So though those kinds of failures didn't make Bitcoin what it is, they did make Bitcoin succeed, in my opinion, in the way that it has. They were the necessary precondition for people to actually care. We've seen a similar pattern repeat, and this time it's more closely linked to the actions of central banks. About a year ago, the mini banking crisis in early 2000 to mid 2023, as you saw interest rates going up and the bonds that commercial banks are required to carry in their balance sheets go down in value, which led to a solvency crisis and bank runs, etc. And you can see pretty clearly people moving assets into Bitcoin in reaction to this kind of banking crisis. So Bitcoin is an alternative financial system completely apart from these central players. And every time the central players mess up, that inspires people to learn more about Bitcoin. Now, I've discussed this pattern appearing twice in the United States in living memory, but of course it happens almost every month somewhere else in the world. There's something like 150 sovereign currencies, and maybe about 10 to 20 of them are decent or reliable or good. The rest of them tend to fail. Every month or so, a new one will fail. Some central bank messed up in a pretty big way, leading to hyperinflation, or even just not hyper, but still very painful inflation. Not 50% in a month, but maybe 20% in a month. And when that happens, that inspires people to learn more about Bitcoin as well.
So it's partly a response to a characteristic pattern of malfeasance on the part of the people who control the money supply. And Bitcoin enthusiasts, the people who develop the technology and propel it forward, are, it seems to me, resisting by exiting. They're just saying no thanks to this, to the extent that it's possible to do so, building an alternative rails for them and for like-minded people who care about freedom and care about sovereignty. Is that right?
I think that's right. And your use of the word exit maybe is reminiscent of this classic trilemma in political science. Do you want to explain that? I think that's what you're alluding to.
What is it? Voice, exit, and loyalty or something?
That's right.
I forget.
That's right. Classic book from the 70s and political scientist. I forget the author, but a famous political scientist. The idea is that when you're dissatisfied with an institution, these are your choices. You could be a loyalist. You can just sort of stick around, hope for the best. You can look for voice. And this is possible in democratic institutions. But notice that central banks are not democratic institutions. They're technocratic institutions. It's groups of well-trained, elite, highly specialized economists, especially, who are pulling the strings and moving around the levers for the
who are appointed, not democratically elected and not democratically accountable. They're appointed by.
That's right. That's right. And maybe that's for the best. It might be even worse, actually, if they were democratically appointed, because then you have, right before November election cycle, you've got central banks putting interest rates back to zero. You don't want this. So there may be some very bad alternatives nearby where central banking is more politicized, i.e. when there's more democratic voice involved. So you've got loyalty, you've got voice, but what if these fail you? They often do. In fact, outside of the liberal democratic world, they fail people more often than not. And for those people, exit is the only option. Now, exit is very expensive and almost impossible for many when it takes the form of immigration. Think about how hard that is to upend your family and your life, and maybe to never see loved ones again, and to try to cross a border where you may or may not have permission to do so, or you may or may not have a permanent residency card waiting for you on the other side. This is a nightmare. Here's what Bitcoin does. It creates an institution on the internet that anyone can exit to without having these high costs of exit normally associated with immigration. So usually, if you're dissatisfied with the police, with the laws, with the elections in your country, it's enormously difficult to exercise this exit option. If you're dissatisfied with your local central bank money, you just buy Bitcoin and you've exited. You've left their power forever, as long as you keep that money in Bitcoin. So it's a powerful tool of exit that leverages the internet to get this cross-border kind of exit option available that wasn't really available for most of human history.
You're exiting in place, which I think is kind of an interesting idea. You're just saying no, but you don't move necessarily. I mean, you might, but you don't have to. Assuming that your government doesn't just overtly crack down on this digital currency, you can use it, wherever it's accepted, and that's more and more places all the time. So you're exiting, but you're still there. It's there's an image in my head that I can't quite get into words, but it sounds like shadow people sort of moving in parallel, but not necessarily intersecting, at least not on the monetary plane.
I like that phrase, exit in place. The image you're giving me is that you've got like this little ghost, and that's your monetary self, and it's left your body. It's in cyberspace now when you have your assets in Bitcoin. And of course, your physical body remains where it is. And the connection between the two is your physical body's knowledge of the private keys, that is the passwords that control your Bitcoin. So part of yourself has exited to cyberspace, but you remain in place. Exit in place. I got to remember that phrase. That's a good one, Trent.
Sequel to the book. Exit.
There we go.
There's a number of attributes that made Bitcoin stand out, but the one that doesn't really get talked about very much is the idea that we went from national systems to suddenly a global system, and that I think is such an important piece of the overall equation. Now there were some lots of efforts leading up to Bitcoin where people were trying to do something similar. One of them was Second Life, where everybody was involved in the virtual world of Second Life, and they had their own monetary system with Linden Labs and Linden dollars.
Yep, that's actually how I bought Bitcoin the second time I ever did it. This was late 2013, early 2014. You had to buy Linden dollars and then trade those for Bitcoin. This is before Coinbase, before I had access to things like Coinbase. So these virtual dollars have been with us forever, but Bitcoin's quite special because it doesn't have a central issuer unlike Linden Labs, which issued Linden dollars.
Right. Yeah. So can you talk a little bit more about some of the other attributes that are built into Bitcoin that make it superior to national currencies?
Yeah, I was actually going to ask a similar sort of question. So I've got a little bit more context here. Where is this question? Oh, yeah. Okay. So this is from a Sound Finance manifesto, which I read. You say you describe Bitcoin and you say for the foreseeable future, the hope for sound finance rests with it and it alone, it being Bitcoin. You also have a chapter called Bitcoin is King in an edited volume that gets into more detail on this. Well, why do you think that Bitcoin alone can support a sound financial system? Like, what do you think about projects like Monero, which share many technical features in common, but also have stronger privacy guarantees? Like, why this one asset in the sea of assets that are out there? Why can it alone carry that torch forward?
I don't have any Monero, and if I did, I wouldn't tell you. But I actually like Monero, so I would rather not think of the Bitcoin versus Monero contrast case, because I don't think that's actually that interesting. Monero is not dubious or weird or bad in the way that many other cryptocurrencies are.
Yeah.
So if it's okay with you, I'd rather draw a different contrast between much more prominent cases in the cryptocurrency world and Bitcoin.
Yeah.
The goal of Bitcoin isn't to create digital money. Digital money is older than me. Money has been digital for a very long time, as long as there's been digital computers. And most money is already digital. It exists in the form of balances and accounts in commercial or central banks. What's special is that Bitcoin is digital money without three different kinds of intermediaries: makers, managers, and mediaries. So makers are central parties who make the money. Managers are those who hold the money for its owners, and the mediaries are those who facilitate transactions. Bitcoin gets rid of all three roles. So maybe let's focus on that maker role, and we can see how Bitcoin eliminates it in contrast to traditional sovereign digital currency equivalents, and then also in contrast to other digital or cryptocurrencies. So here's how digital dollar equivalents get made in the traditional world. A central bank issues them. They're balances on a central bank, deposits or balances in a central bank account, a master account at the Fed, for example. Commercial banks create them when they loan out money, and so on. So they're centralized players deputized by central banks or their friend network, basically, who create. Bitcoin, by contrast, and notice that only those deputized players can create digital dollars or dollar equivalents. You have to have a license or a bank charter or a money transmitter's license, if you're PayPal, for example, to do this sort of thing. Bitcoin is quite different. Who can make new Bitcoins? Anyone. Anyone who has done the work, that is, who's submitted a proof of work, mined a block, as we say in the Bitcoin world, done some computational work to prove that they've actually spent a bunch of electricity, and then they submit a new collection of transactions for publication in the network. And as a reward for that, they get some new Bitcoin. So that's how Bitcoin gets created. Anyone can do this as long as they do the work. So this is sort of like if there was gold in the air spread evenly across the world, and anyone could get it if they just had to grab out and then squeeze with their hands and do the work, sort of sweat, do the caloric expenditure, and then the gold appears in their hands. If anybody in the world could do that, gold would have no central issuer. It'd be quite special. Well, that's what Bitcoin is. It has no central issuer, and for that reason is quite special. Anyone can make Bitcoin if they do the work. Now contrast this to some leading cryptocurrencies that aren't Bitcoin. Here's an example: Ethereum. About 60% of the Ether tokens, that's the native cryptocurrency token of the Ethereum network, which is the second largest crypto network right now. About 60% of the circulating tokens were created for free at zero marginal cost, that is, by the Ethereum Foundation, and then sold to people on the open market. Now, the two things to note here. First of all, note that it's very different from Bitcoin is that they didn't do work on the margin to create these new tokens. They were printed for free. So it's quite different than something that you have to do work to create. Second, notice the revealed preference. What did they actually want? Did they want the new tokens they printed for free? No, they wanted something else. And you know what they sold the Ether tokens for in that pre-sale? Bitcoin. That was the only way to buy Ether. So the revealed preference here is preferring to have Bitcoin instead of Ether. Now, to me, that's quite telling. I'm not saying Ethereum is bad. I'm not saying it's total junk, that no one can't make money by speculating on it. Obviously, you can do interesting things with Ethereum, and people have made money by speculating on it. But the people who made the most money are the ones who printed it for free and then sold it to people for their Bitcoins. So I think of Bitcoin as being quite different in spirit from things like Ethereum because, unlike Ethereum, it does away with makers. Ethereum is still 1/3 central banking, if you like, because it does away with mediators. You can trade Ethereum or move it around without permission of trusted mediators. And it does away with managers because you can hold your own private keys to Ether, just as you can with Bitcoin. But it still has trusted or centralized makers. So Bitcoin is 3 out of 3 in disintermediation. Ether, at best, is 2 out of 3 in those respects.
Yeah, one thing you emphasized a couple of times as you were going through that is that the Ethereum that was printed, as it were, for free is not something you had to work to produce. Whereas with Bitcoin, you've got obviously the underlying proof of work algorithm. You have to expend electricity and resources in order to make new Bitcoin. Why is that so important? Why does it matter so much? Like, suppose Bitcoin's issuance schedule was totally unchanged, but the Coinbase transaction went to a randomly chosen node, like who did no work at all. Why would that be a less valuable currency? Why is the work component so important?
Here are 2 thoughts. First, there's a signaling effect here, and this was especially important for when Bitcoin was being bootstrapped. Imagine that if Satoshi had tried to sell Bitcoin for dollars, what kind of signal does that send? The signal is this: I don't want Bitcoins. I'd rather have your dollars, please. That is not a good way to launch a network. If you're trying to launch an alternative to the dollar and then asking for dollars to do so, people are going to call horseshit on this, and probably rightfully so. Second, this allows for fair distribution for all. Instead of just insiders who can print it for free, or those who are able to get in early venture capital rounds, which is the way that many tokens are distributed for other kinds of cryptocurrencies. That is, it's the developers and their friends who sell Solana tokens, for example, super, super cheap to venture capitalists, and then later they sell it in the open market to everyone else. Bitcoin is fair and open for all. Anyone can mint Bitcoin. So there's an ethical argument here from fairness, as well as a more straightforward economic signaling argument that proof of work is quite important. There are other technical advantages to proof of work as well when it comes to the network being under certain kinds of attacks. We could discuss that if you like, but maybe these are the 2 easier to understand and just see, yes, Bitcoin is special because of those 2 reasons.
There's one flaw in Bitcoin that I brought up a few times, and I'm not sure I've got this squared away in my head. But in the past, lots of people would stick money in their mattress, and then that's where they stored it because they didn't trust banks, they didn't trust anybody else with their money, so they stuck it in their mattress. And a lot of times these people would die, and then somebody would go in their house and find their mattress full of money. And a lot of times houses ended up getting destroyed with all the money in it, and they never found it. So with Bitcoin, if you lose the keys to your Bitcoin, this becomes a big challenge, becomes a big problem. And I've heard different estimates as to how many Bitcoin had been lost along the way. But is there likely to be a system created where people will be able to recover lost Bitcoin sometime in the future? Or is that going to stay permanently lost? And isn't it likely that a lot of people are going to put the keys to their Bitcoin in some locket around their neck, and then nobody can find it after they pass away, and then it's gone forever? And then you think about that happening on a regular basis, and then think over the next 1,000 years, how many Bitcoin will be left? So is this some flaw in the system?
I think you're right to draw the parallel to cash, Tom. And maybe the underlying condition that these both assets both have in common is that they're both bearer assets. So non-bearer or register assets are assets where you can't hold it yourself, but instead some trusted manager holds it for you. So digital dollars are like this. I can't hold digital dollars myself. They have to be in my PayPal account or in a commercial bank account. So also for stocks, when you own equity in a firm. stock certificates that are bearer certificates don't exist anymore. Same for bearer bonds. They're super cool in movies like Heat, where if you have a physical piece of paper, you own the bond and you can transfer it just by stealing the bond or passing it to someone else. So Bitcoin and cash is a bearer instrument as well. It's not registered. It's just who possesses it has control of it without any intermediary or manager. Now, bearer assets are really cool in this respect. You can move them around privately or semi-privately and without other people's permission. They have this one big downside. It's on you, bro. That is, the management of the asset is on you. This is, for many of us, an insane expectation. People say be your own bank, but honestly, many of us are bad at being banks. Banks are good at being banks relative to most of us. So for many of us, the idea of being your own bank or holding a significant portion of your wealth yourself without a trusted and highly trained security force, like a bank has, this is a scary thought, and for very good reason, because you're likely to lose it. And Tom, you cited one way of losing keys, which is dying, but there are many others as well. There's fire, there's flood, there's memory loss over time. And right. You can think of many other things besides. People can steal bearer assets from you by putting a gun to your head. Somebody couldn't steal my condo from me by putting a gun to my head, because to transfer this condo, you'd have to go into the Housing Authority of Singapore and get it transferred, and you can't take a gun into there. So there are lots of ways that having a bearer asset is super risky. Yes, absolutely. Is Bitcoin like that? Yes. So this just shows its nature, that it's a bearer asset. Now, which people should have bearer assets and how much? I think this depends highly on their circumstances. If you're trying to move across a border, you're a refugee, and you want to carry your net worth with you in your head in the form of a memorized Bitcoin private key or 12-word seed phrase, Bitcoin's the way to do that. If you're a kind of normal guy like me with a real job who's fully doxxed and not a criminal, I don't break the law, I'm not at risk, I'm in a safe place, probably less wise for someone like me to store a huge amount of their net worth in Bitcoin, precisely because of these risks. So I think each of us has to dial that in for ourselves. Like, is it worth it to take on those risks? And clearly for some people it is, and maybe for others less so.
Seems like the ratio of like...
Go ahead, please.
I was going to say, it seems like as the ratio of opportunity costs changes over time, like as the prevailing option that you have degenerates, then it becomes a more and more attractive choice to self-custody in this way.
That's right. It's just the same as with cash. How much of your value should you store in cash? Well, if you want to buy or sell a bunch of drugs, maybe you want a big load of cash. If you want to buy a house in a place where you can't buy houses with cash, which is an appreciable fraction of the world, maybe you want to have that value stored as a bank balance, or in Bitcoin for that matter, but not in physical cash. Now, Tom, you asked, is this likely to change? Are there likely to be ways to recover lost Bitcoin? And I would say, well, there's one way of recovery that's probably not going to happen, which is being able to move Bitcoin without access to the private keys. That would fundamentally break the protocol. So that kind of recovery, just not going to happen. But there are increasingly useful and usable tools that allow for safe management of private keys, especially using this little gizmo called multisig, multiple signatures, which means that you can have your Bitcoin private keys or the passwords split across multiple locations. So we could do this as a 2 of 3 multisig, for example, where we split the keys to the stash of Bitcoin into 3 locations. And you could lose any one of those. And as long as you have access to the other 2, then you still have access to your Bitcoin. So you could keep one underneath your mattress. You could give one to your lawyer and give one to your best friend. And then if your lawyer turns out to be bad, you and your best friend still have the keys. If your best friend turns out to be bad, well, you and the lawyer still have the keys. If you've lost your keys, heaven forbid, well, maybe you call on your lawyer and your friend to help. So using this kind of tool, which is just a nifty little piece of primitive cryptography, we can actually make private key storage much safer and more resilient to attack than even the storage of traditional physical bearer assets like gold. You cannot do multisig with gold, but you can with Bitcoin.
I wanted to ask a question about banks, because another thing you say in your piece of Sound Finance Manifesto is that sound finance needs no banks and instead calls individuals to be their own banks. But there are other people, and I think Eric Yakes is in this category, that, you know, on a Bitcoin network and a Bitcoin standard, you would still have institutions that are not banks in a fiat sense, but that still serve some kind of similar function. And it's not really clear to me that that function per se is illegitimate. So, you know, when you say needs no bank, should we take that literally? There will be no institution that holds these things for you or has any of those responsibilities? Or do you mean like banks as they currently exist will go the way of the dodo, but that doesn't necessarily mean every person is personally responsible for custodying their own assets?
Needs no banks should be read as doesn't require a bank, not precludes a bank. So there are and likely will be Bitcoin banks, that is, custodians that take your Bitcoin for you and then do various things with it, just as a bank might take your dollars and do various things with it, including simply storing it or releasing it when you authorize for transactions, payments, and so on. So I don't think there will never be Bitcoin banks. There already are. But what I think is important is that Bitcoin doesn't require banks. And if the folks at places like Atomic Finance are right, we can actually build up sophisticated financial infrastructures that goes beyond payments into finance atop a Bitcoin layer that doesn't require those kinds of trusted parties. So one way that Atomic does it, for example, and this is just one firm in the Bitcoin space that is at the cutting edge of doing this on Bitcoin and Bitcoin alone, is what they call discrete log contracts. And this allows you, with some trust but minimized trust, to sell covered calls on your Bitcoin, which is the kind of financial bet. So you're basically taking part in something like a traditional financial market, but you're doing it without a custodian holding your Bitcoin for you. And that's pretty cool. It doesn't need a bank, but it doesn't preclude a bank either. And obviously many of us show by our actions that we actually prefer to use banks. That's okay. What I want is not for nobody to use banks, but for everybody to have the option to not use them if they don't wish. And that's what Bitcoin has brought to the world.
Yeah, I like that. That's a very compelling answer.
Yeah. So one of the real famous quotes that Banksy made, Banksy's kind of the crazy artist that nobody knows who he is.
Speaking of banks, let's talk about Banksy.
It's not a tortured segue at all. Go for it, Tom.
No, it worked perfectly. Go ahead, Tom. I'm sorry.
One of his famous quotes is that nobody cared about me till they didn't know who I was. And I thought that was so interesting how much of that applies to Satoshi. And would we care about Bitcoin if we knew who he was?
Yeah, there's something of an allure to maybe the most important pseudonym of all time who's managed to remain a pseudonym. Most pseudonyms are unmasked. In the internet age, even people who are very careful, they get unmasked. Satoshi has yet to be unmasked. That's pretty special. And of course, it draws our attention.
I wanted to ask you about the financial infrastructure. So you said that, I actually have a quote here, you just referenced banks, you referenced log contracts. Is that what it's called?
Discrete log contracts, DLC.
Discrete log contracts, other things like that. And then in the same piece, the Sound Finance Manifesto, you say, a sound foundation, by which you mean Bitcoin, it does not suffice for a full building. To build and build well, you must ensure that the new financial system inherits the qualities of its sound foundation. You've mentioned a couple of things. What do you think will emerge out of Bitcoin? Do you have any thoughts on the new sorts of institutions or financial instruments, et cetera, that we might see emerge on this new network?
One of the holy grails of building on Bitcoin is what's called a trustless two-way peg. What that means is that we could have another network connected to Bitcoin where you can lock up your Bitcoin on the Bitcoin side and then unlock a token that represents the Bitcoin on that other network, and do this in a trustless way. So instead of having a custodian hold the Bitcoin for you and then issue an IOU on some other digital network, cryptocurrency network, or bank, whatever, that we could do it, and using some cryptography gizmos, make sure that we could do it trustlessly in both ways. That is, so we're trading around this Bitcoin IOU in this other network, and at any time, without anybody's permission, we could exchange it for real Bitcoin. So that's the peg going in the other direction. Or exchange Bitcoin for that IOU, should we wish. Again, without anybody's permission. So this is the holy grail. Is it attainable? Well, we've been trying for about 10 years to attain it. And about maybe 9 months ago, a very important breakthrough came through on the technical side of Bitcoin, which basically could, maybe will allow that to happen, a trustless two-way peg. The significance for building financial layers on top of Bitcoin is this. These other networks can operate and have whatever rules they like, and no Bitcoiner need care about them because they're not operating on Bitcoin itself. It's a separate network that only connects to Bitcoin through this little sidechain, they call it. So that means that Bitcoin can stay intact, unmolested, unbothered, moisturized, in its lane, 21 million cap intact, and so on. And no Bitcoiners ever need get agitated about whatever else is going on over here. Now, what could go on over here? Lending, credit, token bubbles, random financial crap, some dangerous, some degenerate, some not. I predict that all of those and more will happen over there. But what matters is that there's a trustless two-way peg to move between them. Now, why is this, or why would Bitcoiners actually want this? Well, the more you can do with something, the more useful it is and the more valuable it is. So if you can do more things with Bitcoin, for example, buy bread in addition to drugs online, if you can buy houses with Bitcoin, or if you can buy IOUs that are useful to use in collateralized loan formation and so on, that just makes Bitcoin more useful. So that is the self-interest argument for building these kinds of alternative networks that plug into Bitcoin. And the other one is that they suck demand away from other cryptocurrency networks. It's like, why do people want these other cryptocurrency networks? Well, because they can do random stuff that Bitcoin can't. Well, why not just do all that stuff with Bitcoin, but do it safely in a sort of cordoned off sandbox that's connected to Bitcoin, but where there's just a peg that's connecting them rather than something that could infect Bitcoin with, for example, rehypothecated fake Bitcoins or something like that. So that is one technical development that I see as very interesting, and that, as you can tell, I'm already studying it, and I'll continue to study and write about it in the months to come. The technical innovation that made this possible, by the way, is called BitVM. It's an all-purpose CPU, basically, that allows Bitcoin to compute any scripts. Not any scripts that are computable, but a great many scripts that are computable can be done.
It's not Turing complete. BitVM.
That's right.
Turing. Okay.
That's right, because Bitcoin doesn't have loops. Bitcoin scripting, you can't do loops, so it can't be Turing complete. But it can provide wide functionality.
Okay,
so you guys have views about this? Bitcoin's technical future? Trent, you asked. I'm sure you have ideas here.
Are you enjoying this episode of the Futurati Podcast? If so, please like it, give the show a 5-star rating on Apple Podcast, Spotify, or wherever you get your podcasts, and share it with your friends. By far, the best way to help us grow is to spread the word on social media, which will expose our content to more people and help us continue to bring you interviews with world-leading experts in AI, quantum computing, cryptocurrencies, and so much more. Thank you in advance.
Yeah, I think that ultimately what sets Bitcoin apart is the set of properties that you described, that it is trustless, removes intermediaries, and is ultimately deflationary. But part of what allowed that to be achieved are technical limitations. So, you mentioned looping, for example, like the scripting language is very simple. I think scaling it up beyond a certain TPS is very hard. And so what I'm very excited by are a panoply of different solutions that have emerged in order to try to scale Bitcoin's functionality, to bring things like Bitcoin-backed DeFi, smart contracts, or various things. Like, part of what draws people to Ethereum is just that it's a Turing complete universal computing platform. There's a lot of stuff you can build on top of it, and that's all very exciting, but it has the problems that you described earlier. And I think that if you can find a way to marry the two, that's very compelling. If you can use Bitcoin to back a broader DeFi enterprise, I think that you can have the best of both worlds. And some of the things that I'm watching most closely are exactly the projects that are trying to achieve that.
I like the idea of marriage. I would add this to it. It's marriage with a prenup, because this other stuff that happens on that other network can't infect Bitcoin if we've coded the peg right. It's just the Bitcoin can move across that bridge, but there can't be rehypothecation or other worrisome infections of the Bitcoin network and its key properties.
So does Bitcoin somehow grow into a global currency? And if not, what new attributes would have to be created for something to actually fill that but I feel there's kind of a gap in the world right now.
Well, in a way, Bitcoin already is a global currency in this respect. Anyone across the globe can use it, and they can use it in a wide variety of places to buy and sell things. But you're asking, will it be a dominant global reserve currency or a currency in which prices are actually denominated? Perhaps most importantly, things like prices of oil or energy. That would be a key indicator of Bitcoin actually having arrived as a currency at the global level. What would it take? Well, I'm not sure that Bitcoin ever will achieve a global currency status in that latter sense, in part because of the supply cap. A lot of people have shown through their actions that they're perfectly happy with a currency that can be inflated away, that the central bank can print more of. And despite Bitcoin's existence for 15 years now, oil still isn't priced in Bitcoin. And the hard cap tends to create more volatility because the only way that Bitcoin can respond to changes, Bitcoin cannot respond to changes in demand with corresponding changes in supply. So Bitcoin's price is entirely a function of its demand. That leads to volatility by basic neoclassical price theory. This isn't super complicated economics, just to like look at a little supply-demand chart. The demand curve is a flat vertical line in Bitcoin's case, or expected supply curve is a flat vertical line.
Yeah.
Supply, yes, pardon me. So for those reasons, I'm not going to say it never will, but I would be surprised if it were to become a global currency in that sense, a dominant currency in which things like oil are priced. Now, here's one scenario that could make that more likely to happen. If the U.S. really messes up, if those who control the global reserve currency now, the U.S. dollar, really mess up in their management of it and lose that monopoly or, something close to monopoly on reserve currency status. If that happens, if American empire falls, or if American technocrats fail in a pretty significant way, all bets are off in terms of what the alternatives would be. Here are other scenarios that could help make Bitcoin more viable. Rising authoritarianism, where more and more people need access to resistance money that can be moved without the permission of authorities. Or rise in conflict, where more and more people are in conflict with the United States and don't want to use an asset that is under the thumb of the Fed and of American regulators and the Treasury and so on. If those kinds of things happen, I could see room for significant more demand for Bitcoin as resistance money, and a global one at that.
You think that ultimately the global currency, the global digital trustless currency we end up with will be perhaps not Bitcoin, but something backed by and settled on Bitcoin? Like I know people have advanced this thesis, and it's one that I find a certain amount of plausibility to, that Bitcoin will be more like a settlement layer. Like many of your day-to-day transactions may not be in Bitcoin. There's just not enough of it, or what have you, or it's too expensive. But it's like the immovable final layer underneath it all.
Could be. Hard to say. I know this is a podcast about the future, and you're very familiar with this fact that the future is hard to see. Yoda made this observation long ago. Hard to see the future is. I agree with Grandmaster Yoda in that respect. I will say that the existence of sidechains, which allow random stuff to happen connected to Bitcoin, would make that kind of future more likely, because then there could be Bitcoin-backed dollar equivalents, which would be using the dollar as a unit of account, which is very popular, but doing it in a way that's not under the thumb of the Fed or the Treasury and their deputized network of partners and regulators and oversight and their control. You wouldn't have to use FedWire or ACH or anything like that to move these dollar equivalents. So that could be very attractive. And one reason we know that it could be attractive is that it already is attractive in a way, because we look at the rise of stablecoins, which are dollar equivalents, but not under the easy or direct control of American regulators. Now, to some extent, they sort of are, like USDT. You can freeze accounts, you can freeze balances, and American regulators are already requiring Tether to do that. But in some ways, it's still a bit of the Wild West. And that demonstrates, I think, demand for dollar-denominated non-dollars, things that use dollars as the unit of account, but not for the other functions of money and not for settlement.
So can you, do you have more of a precise date of when the last Bitcoin will be mined?
The date typically given is 2140. Actually, that what's more likely, given where hash rate is today, it's something like 2139 quarter 2. The last I saw.
Okay.
People
we're
a bit
working the projections out that
we're about 2 quarters ahead of schedule as of now. Of course, hash rate, that's a long time between us and then, 120 years. So if hash rate slows significantly for a good 20-year period there, we could be back on schedule to mine that very last Bitcoin in 2140.
So how many halvings will we go through by then?
Off the top of my head, I couldn't say. Is it something like, let's see.
It's every 4
divided by 4.
Yeah.
Yeah, so take 2140 minus 2009 divided by 4. That gives you the approximate number of halvings.
Yeah, so I assumed 120 years divided by 4. Yeah, 30 more halvings. But you know, that too depends on hash and
Right.
all of this. It's every how many block? 200,000 blocks?
210,000 blocks.
210,000 blocks. Yeah, so it depends on how quickly they're produced. Yeah, you got
Right.
all sorts of factors that introduce variability in there, but something
Right.
like that. Okay. Now,
Tom, was there a reason you asked about that? That's a curious question.
Yeah. I guess we're in kind of a bull market right now with the price of Bitcoin going up substantially, and I'd like to get your prediction on where it ends up here by the end of next year. I think that would be an interesting one. And then also, I think that understanding that we're not going to be running out of Bitcoin to mine instantly, I think that's a piece of the equation that gets overlooked a lot by people that are involved in all the cryptocurrencies that are out there. See, 21 million seems like such a small number compared to, I don't know, like some that have like a quadrillion coins to start off with.
Well, in the protocol itself, the unit is not Bitcoin. It is rather whole numbers. So it wouldn't be 21.00 something Bitcoin. In the protocol itself, because the math that's used, it's all integers. So it's all whole numbers. And so the whole numbers are denominate sats, 1/100 millionth of what we call a Bitcoin. So in fact, the cap for Bitcoin is just shy of 2.1 quadrillion sats. So if you want to make it sound like there's more Bitcoin and get rid of unit bias, you just talk about sats, which are the fundamental unit of Bitcoin. And under the hood, that's actually what's being moved around, not Bitcoins, but rather one or more of 2.1 quadrillion sats.
All right.
That's an interesting way to think about it. You should also just know that Thomas is filled with curious questions. We used to ask guests, the first guy to put a clock together, how did he know what time it was? And it was just fascinating to see like a range of different responses and reactions. Like some people got flustered, other people just rattled it right off. Like, sundials probably, and they just iterated. It was interesting to see. I had a question about your piece, Bitcoin and Orange New Deal. So in that piece, you advanced this remarkable thesis that government should invest in Bitcoin infrastructure precisely because that infrastructure is a public good. And for those who don't know, public goods are non-rivalrous and non-excludable, and therefore, according to mainstream neoclassical price theory, it will be underproduced by a free market. But many economists have also argued that money itself is a public good. So if your underlying argument about the infrastructure is true, why not take it to its logical conclusion and have the state in charge of money if that's the way it should be operated?
It might be useful for especially Bitcoin enthusiasts hearing about this thesis for me to put this caveat around it. I think of this as a conditional thesis. It's if you accept these standard arguments for state involvement in building infrastructure, then you should accept a parallel argument for state involvement in Bitcoin infrastructure. Now, many Bitcoiners don't accept that standard argument because they tend to be on the libertarian or anarcho-capitalist side of things. As far as I'm concerned, that's okay. This argument isn't for them. It is rather for those who are convinced that the state should be involved. And then our thought, this is a paper I wrote with Brad Rettler, one of my co-authors. Our thought was, well, let's consistently apply that. And of course, the state shouldn't be involved in just keep our conditional on. So we're assuming that the state should be involved in the production of public goods. Well, it shouldn't be involved with these little proprietary networks that have a token issued by a central foundation or something like that. No. But maybe if there's a piece of neutral infrastructure available for all, that's more like the sort of thing the state should be involved in. So think about the internet itself. In fact, the state was involved in the production of the internet and the ongoing sustenance of internet background, and a lot of technologies that support the internet globally are supported by American empire. So the state is involved in the production of those kinds of public goods. If you think that's a good thing, you should just add Bitcoin to the list, not by buying Bitcoin itself, because notice Bitcoin itself is a private good. It's rivalrous and excludable. If I have it, you don't, you're not consuming it, and I can keep you from consuming it. So we're not talking about governments buying Bitcoin. We're talking about governments helping to educate people about Bitcoin, running Lightning nodes, which allow fast and nearly free Bitcoin transfers. And you can read the article for more examples. So take it as a conditional thesis, especially for my ANCAP friends. It's not an attack on you, and it's not an argument to be a statist. It's just that if you are a statist, here's the kind of statist you should be. You should be a pro-Bitcoin one, because it's neutral infrastructure for all.
An orange statist.
That's right. That's right.
How optimistic are you about that scenario? I mean, you said it's conditional, so you might totally reject the basic statist premises that lead you to categorize goods as public or private or common pool or what have you. But assuming you do buy it, assuming you're conditional, how likely is it, do you think, that governments would invest in such an infrastructure project? Because it seems as though they're steadily eroding one of the most awe-inspiring sources of their power, and that is control over the money. And they don't have a long history of doing things like that, I notice.
Good point. States and other kinds of institutions are loath to give up power, and they do so only rarely. But sometimes states actually produce freedom technology. Here's an example: cash. American dollars in physical form are among our finest exports because it brings resistance money of a certain kind to the world. Anybody can freely and privately transact using physical US dollars. And this is supported, this is subsidized by the American federal government. Now, it's not entirely selfless, of course. This is also in promotion of American empire and the supremacy of the dollar. But let's give credit where it's due. Sometimes governments do support freedom technology. So maybe Bitcoin could be such a case. We have some empirical evidence here, perhaps most importantly the case of El Salvador, which has led and funded or subsidized Bitcoin mining, the existence and ongoing sustenance of Bitcoin Lightning nodes, and even a Bitcoin wallet, Chivo, which is available to all citizens of El Salvador. Now, has it done well in some of these things? I'd give it a 2 out of 3, maybe a 1 out of 3 on these. The mining operation has been a great success. Chivo, not so good. And the connection between Chivo and Lightning infrastructure, also not so good. So empirical evidence suggests that at least some states have been and will do this sort of thing. Will others follow suit? Possible. No guarantees. And I wouldn't say overwhelmingly likely. I'll just say it's happened a bit. It will happen a bit more, but I'm not going to make a prediction more dramatic than that.
And so there's a lot of people that are looking at the United States right now as having a hard stance, an anti-crypto stance with this administration. What does a country like the U.S. lose when they take a stance like that?
Moral leadership, credibility, a chance for American innovation to win once again, a chance for America to lead in the creation of freedom technology. Americans tend to be big on exporting values, democratic values, the idea of freedom, and so on. And sometimes Americans have done some very violent things to export those values, for example, going to war. I think of Bitcoin as a nonviolent way of exporting those values, just as American cash is, by the way, physical cash. This is a way to bring freedom to the world. So what do we lose when we don't do that anymore? Well, we lose moral credibility. I say we, I'm an American citizen. I've lived abroad for 12 years, so I don't know if I should say we anymore, but whatever, I'll say we. We lose moral credibility when we don't promote freedom in those peaceful or nonviolent ways, but instead do it in violent ways. So my own view is that something like America's moral reputation, at least in part, is on the line here. Now, there are more concrete things too. So when American regulators or law enforcement officials jail developers just for creating privacy technology, so this has happened in recent memory to people on the Bitcoin as well as crypto side of things, the creators of Wasabi, a Bitcoin privacy tool, the creators of Tornado Cash, an Ethereum privacy tool, jailed in the European Union in the United States or charged or indicted for money laundering. Now, they didn't actually launder money. They created tools that allowed people to privately transact. And then what people do with that is on them. To me, that is not just a blow to America's moral authority, and the European Union's in this case as well. I believe it was in the Netherlands that the Tornado Cash developers are, one of them is currently in jail. Another one, I believe the trial is still ongoing. Not just a moral blow, but there are pragmatic consequences here as well. Because when those developers go into hiding, their tools are no longer available for people outside of the US to use. I know people in Russia and in other places, I've personally met them, who have used these tools and who are now scared to do so. And they don't know what to do without privacy tools available to them. How do they collect donations? How do you fund Alexei Navalny's funeral, which in fact was funded by Bitcoin donations? If people can't donate privately, Putin will find out, and he'll jail any of them that are still Russian citizens or that are still on Russian soil. So there are very real human rights implications for these kinds of crackdowns, in addition to the more abstract moral values or image that are also at stake.
Thank you. That was very well stated.
Staying on the topic of America's moral leadership for a moment, what role do you think that plays in international relations? I care about doing the right thing, but in terms of a reputation for doing the right thing, especially if I'm a sovereign and the most powerful one in the world at that, why is that an abstract value worth preserving and protecting?
In part, you're asking why is doing the right thing to do? And when I frame it like that, of course, do the right thing. But
that sounds like a tautology.
Which is true, but uninformative. We can connect it to maybe more pragmatically appreciable consequences as well. In places where there's good opinion of the United States, there's better trade relations. People want our stuff and we want theirs, and they want our dollars. They want to come to the United States as tourists and vice versa. They're open to Americans who come there as tourists and so on. So I don't think that American opinion of the United States going down over time across the globe is good for us in terms of our pocketbooks either. That means closed doors, that means closed hearts, that means closed minds to Americans in general. And that's just not good.
It kind of intrigues me how this could be woven in with some of Matt Pine's theses around how Bitcoin redounds to America's national security interest, and that purely from just as Machiavellian or I guess Bismarckian perspective as you want to look at it, it's still worth developing, like all the rest of it put aside. And this is not exactly the same thing, but it strikes me as being sort of in that camp and just a fascinating lens through which to view crypto assets, which are usually seen as antagonistic to the state across the board.
That's right. Matt is a friend and a fellow at the Bitcoin Policy Institute with me and my co-authors. So I recommend his work and Twitter feed and writing to all.
Do you recommend the interview we did with him? Because that was pretty good.
I listened to bits and pieces from your archive, but I didn't see that one. I should have gone straight to that one.
Oh yeah, we have that one. Lynn Alden, Peter McCormick. We have a Bitcoin playlist where all those, or a crypto playlist rather, where we've got that and a lot more obscure stuff too. We spent a whole
terrific. Yeah, well, add me to the obscure list.
No. This one I imagine will take off. I'm pretty excited to see how it does. Thomas, I think you were going to say something.
Yeah, I just keep thinking about the constant resistance that kind of the old money people keep throwing up, and I can see after Jamie Dimon dies that his tombstone has a phrase on it. He's a smart guy, but he didn't understand Bitcoin.
Sick burn. That's harsh. Tough, but fair.
Yeah.
Yeah.
Yeah, maybe. Yeah, I know.
Doesn't have diamond hands.
Poor guy.
Embarrassing. And it was such an opportunity too, like he could spell it like his last name, and the T-shirts, the headlines write themselves, and yet it's just a missed opportunity. Not unlike his foregone Bitcoin returns. Yeah, I have a question that I was actually going to ask at the very beginning, but having covered all this ground, it might be satisfying to sort of come back to our origins. So, as I said, Resistance Money is a philosophical book. You're providing a philosophical framework, and I wanted to get into the details of that a little bit more because I'm very interested in philosophy. So what are some of the philosophical tools you're using in your analysis? I think you mentioned economics. We've spent a fair bit of time on economics. You threw some other ones out too. We also talked about normativity and America's moral reputation. Is there epistemological frameworks that you're using? I actually have specific questions about that too.
Yes. Bitcoin activates our most intense and irresistible biases. Here are two. First of all, unlike other pieces of neutral internet infrastructure, you can actually buy Bitcoin. It's kind of like buying shares in TCP/IP. Very curious that you can do this. So we have financial bags at stake. Those of us who own Bitcoin have that at stake. Those of us who are short Bitcoin. And of course, there are people who are reputationally short Bitcoin as well. When they've been predicting Bitcoin's death for 15 years and been wrong for 15 years, that activates a powerful psychological bias to double, triple, or quadruple down. So there's one kind of bias. Another kind is politicization, as when we identify something, a new technology, as being right-wing or left-wing, we put this political label on it or a color, red and blue. And then our tribal biases get in the way of seeing clearly what it is too. So these are two of our most powerful biases possible: self-interest, our money, and then our political markers or tribal markers. Both are activated in the case of Bitcoin. So it's really hard to think well about this. What's one to do? Well, here's where philosophy can help. In the book, we propose a thought experiment to allow people or help us get into the right mood to evaluate Bitcoin in a more neutral way without our biases. And the thought experiment is this. Imagine that when you wake up tomorrow, you will be someone, but you don't know who you will be. You could wake up to be a farmer in Venezuela, a salaryman in Japan. You could wake up to be me. You could wake up to be Thomas. You could wake up to be a family member of Alexei Navalny, mourning his recent death. You could be Vladimir Putin. So then ask this question. Since you don't know who you'd be, but you know everything else you know about the world, would you want there to be Bitcoin in the world or not? Would you want to wake up in a world with Bitcoin or a world without? Well, here's an interesting thing. When you don't know who you be, you're going to start to be risk averse in a certain sense, because you want to make sure that if you're in one of these people who's, let's say, the bottom quintile or the bottom decile in terms of well-being or access to democracy, access to a good money that's not going to hyperinflate, access to quality banking, you're going to want access to an alternative that gives you escape or exit in place. Let's go back to that nice phrase. You're going to want there to be an option for exit in place if you turn out to be one of those people. So of course, Bitcoin doesn't benefit everybody. Bitcoin does not benefit Jamie Dimon. He's probably better off in a world without it. Fair enough. And yet, from a perspective of not knowing who you'd be, we argue that you'd want there to be Bitcoin in the world just in case you turn out to be one of these people. And maybe a key piece of data to support this is just to look at Bitcoin adoption and then look alongside 3 indices that track authoritarianism, inflation, or financial exclusion. What's interesting is that Bitcoin adoption is higher if you look for places that are bad on democracy or high on authoritarianism, that are bad on financial inclusion or high on exclusion, and that are bad on inflation. That is where inflation is high or unpredictable or even rampant. Those are the people who need Bitcoin the most, and there are actually billions of them. So the odds are quite good. If you didn't know who you'd be, and you could wake up to be anybody, the odds are actually quite good that you'd be somebody who's going to be totally screwed without Bitcoin, or screwed on the margins, or screwed a little bit without Bitcoin. So this is a tool that helps us see past our biases, both pro and con, and maybe see the heart of what Bitcoin can offer the world, which is resistance money for people on the margins.
So this is the Richard Rorty view on Bitcoin, the way of asking that sort of question?
It's probably most famously connected to John Rawls, this old Harvard philosopher. But
That's what I meant. I meant Rawls.
But actually,
yeah.
But our version is importantly different from John Rawls, and we found an earlier version than Rawls, about 20 years earlier, from this economist/philosopher named John Harsanyi. So for the philosophy nerds out there, that's the one we're drawing from. It's the behind the veil thought experiment, not from John Rawls, who made it famous, but actually this other guy, John Harsanyi. And the key thing there is that we think you should keep in mind everything you know about the world and its institutions and the way they fail us. Just don't keep in mind your knowledge of your identity, who you are. And that allows you to have a neutral, but still fully informed perspective on things.
You endorse any particular theory of concepts or concept formation?
Oh, this is complicated. I'm what's called a Platonist, so I believe in the existence of abstracta, abstract ideas. The idea of justice, of numbers, and so on. Now, as far as how we get contact with those, so concrete material beings like us, how do we have knowledge of those abstract immaterial ideas? This is a classic problem for Platonists, but I'll just give you a little label. I'm a Platonist for what it's worth.
Oh, wow. Okay. Oh, well, I'm kind of struggling to resist the urge to get into this because I happen to have just read a whole bunch of Plato, and I've been reading a lot of it.
Which dialogues did you read?
Oh, we read most of them over the course of about a year. I don't have my copy handy, but yeah, I mean the Euthyphro, obviously the Republic, the trilogy of Socrates' death, some of his writings on epistemology, and in particular the ones in which he defends, the view that ultimately became associated with Plato, that there's this realm of the forms. And I'm curious, I'll ask one question.
My favorite is the Phaedo. I love that.
We read the Phaedo. Yeah. We read the Phaedo.
I was 18 when I first read it. Unforgettable experience. I come back to it still. Beautiful book.
No, he was an excellent writer, and they're very entertaining to read. Yeah, we discussed all this. We had these longs. It's actually part of a now defunct group called Online Great Books, which is exactly what it sounds like. It's an online media group for great books. They ended up closing doors, but some of the groups persisted, and mine is one of them. So we just do it privately now. We just meet once a month to talk about it. So we did a bunch of Plato and Aristotle, and this is one of the recurring themes. So I'm just curious about I've always wanted to ask a hardcore Platonist, what the ontological status of the forms are. What reason is there for believing that there's this whole separate world of concepts that we make contact with, as opposed to being something that we arrive at through a specific identifiable process?
In a way, I think it's both. I do think we arrive at our knowledge of the forms through a specific identifiable process. That's called abstraction. So that's how we come to know them. But what they are, I think of them as immaterial, timeless, abstracta. So abstract means they don't have causal relations. They can't make things be or not be. They can't kick you or kiss you. They can't do the things that material objects can do. Now, why believe in them? Well, in a way, I could say, go read some Plato, but that's probably not a very good answer. I'll give you one of my favorite arguments for the existence of such things. There are truths of mathematics and science that if you write them out and think about them rigorously, strictly entail that there are such things as features or numbers. So here's an example. I could write you a little proof using just the axioms of piano arithmetic that there is a successor to 2. That is the next whole number after 2. We could write a little proof for that. It's just a couple lines long. So there is a successor to 2. We call that number 3, by the way. From this, it follows that there are numbers. Now, what would numbers be? So we know there are numbers. We can derive this from some very simple axioms with a very simple proof. So we know that there are numbers. What would numbers be? Well, this isn't a number. This isn't a number. I'm not a number. I'm a man. Trent, you're not a number. I look around. I don't see anything that's a number. So what would numbers be except something else? So that's an argument by rhetorical question, from the existence of numbers to the existence of numbers that aren't material. Now, can numbers kiss things? Can they kick them? No, I don't think so. I think numbers can be added and subtracted and multiplied, but those aren't causal relations. That's not the transfer of energy across a barrier. That's not the motion in space and time. Those are mathematical operations. That's the only thing numbers can do. So they are inert causally, They're not to be found in space and time. Well, now they're starting to sound more and more like the stuff Plato talked about, what he called forms, ideas. Now, beyond just numbers, we can use the same kind of argument to generate Platonism about other kinds of ideas. So here's a classic little case. This is from basically a combination of W.V.O. Quine and Peter Van Inwagen, two 20th century and 21st century metaphysicians. Take a sentence like this. There are more features that spiders and insects have more features in common than do spiders and abalone. Okay, that looks true. Somehow that's true. But if you write this out in first order logic and think it through, it turns out that there are features. There are features that they have in common. There's more features. There are features. Well, what are features? Features are ideas or properties. They're ways things are. So that's a more complicated argument. It will require more defense to actually get all the way to Platonism. But I think it does get you all the way to Platonism, not just in the case of numbers, but in the case of ideas too. And then we're off to the races trying to figure out, well, okay, there are ideas. They exist. But what are they? Where do they exist? Not here. Somewhere else. I call that Plato's heaven.
Do you need a dynamic and knowledgeable speaker for an event? Thomas Fry and me, Trent Fowler, are both seasoned keynote speakers, able to converse on a wide array of topics to audiences of all sizes and skill levels. Go to the contact page at futuraudiopodcast.com to book Thomas or myself today, and let us apply our years of experience in public speaking to make your event a smashing success.
I think they're mental integrations produced by certain kinds of systems, such as human brains and possibly artificial intelligences someday. I wouldn't posit that they exist separately. I think what you do is you regard entities in a certain way. You notice certain relationships like perceptual similarities when you're first operating on the perceptual level, but then over time, using the exact same kind of process, you can form more and more abstract concepts. Your very first concepts are perceptual, like you notice that there's a red bird, a red sign, and a red flower, and what you do is you ignore the entities involved and just focus on something that does not and cannot exist apart from an entity, right? And that's an attribute. Like attributes don't exist in the abstract, but you can look across different entities and say, okay, I'm going to ignore the entities and just focus on a range of colors that are perceptually very similar to one another, and I'm going to call that red, or I'm going to call that blue, and you delineate the color spectrum. And then when you notice, human beings or animals, you're performing a similar sort of thing. You're noticing that some things move and some things don't, and some things seem to have goals. They go after things, and some things don't. And you start with perceptual level data and gradually integrate it into concepts, and then form those concepts into more and more abstract chains of concepts, and including normative concepts and all these other things. And I think a similar process is underway when you're talking about numbers. It's not that numbers exist separately. It's that you can look at 4 apples or 4 puppies or 4 balloons, and you ignore the entities involved and say what they have in common when I'm thinking about them in this way, regarding them in this particular way, is that there is this many of them, right? I could arrange it in a square or something like that. And so it's not that there's a separate form. It's that particular kinds of systems are undertaking a process whereby they're able to group entities along some attribute or some axis that they care about. And that's where you get concepts. Your response?
Would there have been a successor to 2 had human beings never existed?
I don't think we would ever have. No, I think that deriving the kind of system that allows you to ask a question like that, let alone answer it, requires an entity like a human being that starting with numbers, starting with the most basic abstractions, notices that there are rules to these systems. Those, emerge from reality as well, or are characteristic of it. There's different ways you can kind of get into that, but using logic, you can use the machinery to generate more of itself and analyze increasingly abstract numerical patterns. But I think in the case of, mathematics, you get these interesting phenomenon, like in the 20th century, 2 different people independently arriving at non-Euclidean geometries by rejecting the 5th postulate. So there are different ways of getting to non-Euclidean geometries, but it turned out one of them, the Riemannian version, was a good description of what happens to the universe under an Einsteinian understanding of it. So you can take this set of tools, the set of machineries like deductions or syllogisms or what have you, crank out a lot of different math, but then some of it, you still have to go back to reality and say, which parts of this describe it particularly well. And I think, that and the fact that the earliest mathematics came about as a result of people trying to solve problems. like determining the acreage that they had to water for a crop or something like that. So math comes from the world too, and you can do this really crazy abstract stuff with it, but you still have to go back and look at which parts of it describe the natural world empirically in order to see which parts of it are true.
I agree that our knowledge of math depends on us, and that the proofs that we've discovered wouldn't have existed in the form that they do, on paper, written out with numerals, had we not discovered them. But I think that mathematical discovery is actually discovery rather than creation. So we didn't create these truths about non-Euclidean geometry. We discovered them. And it's a combination of both abstract and empirical inquiry that leads to those kinds of discoveries. So discovery means that you found something that's already there. I think the mathematical truths predated us and will post-date us. 2 + 2 is equal to 4, long before human beings evolved, and will remain so long after we cease to exist. But if that's true, then it doesn't depend on us for its truth and can't live only in our heads. It has to be somewhere else. And then the question is, where? Platonism answers, not here. It's outside of space and time. Of course, I don't expect that answer to settle things. This is metaphysics. This is, by the way, what I did for a living before I got into Bitcoin and the philosophy, politics, economic stuff. This was my main jam, was fussing over things like just this.
Yeah.
I wrote like 20, 30 papers about this kind of stuff. I've moved on to Bitcoin for now, but it'll always be my first love. Free will, metaphysics, time, modality, God, all that kind of good stuff.
Well, we could spend 2 hours talking about that stuff. It's kind of a first love for me as well. But we've already spent almost an hour talking about Bitcoin. So we should probably start wrapping. No, it's more like an hour, 20 minutes. I don't know exactly, but it's been a little bit. So let's respect Dr. Bailey's time. Is there any kind of last things you would like to leave the audience with?
We have a book coming out 1 week and 1 day from the time of recording. So it's a good book. I'll give a pitch for it, if I may. It's an academic monograph. So we really went long in terms of the research. It's meticulously researched, over 500 footnotes. But we also put them as endnotes to make it easily readable, and we use lots of fun examples. So we want something that anybody can pick up and learn everything they need to know about Bitcoin to have an informed opinion about Bitcoin. Those who want to go deeper can. Look at the footnotes. Look at the bibliography. There's 500 sources for you to feast on if you like. And it's a great book to give to friends and family, especially those who aren't already engaged with the Bitcoin world. Many Bitcoin books come from a really charged ideological or political perspective. They have a lot of assumptions that many people don't accept. This book is intended for normal people who don't have weird ideological baggage. It's the kind of book that won't embarrass anyone to hand out, and is less extreme in some ways than other Bitcoin books, but still we hope useful for anyone, critic or friend alike, who wants to understand Bitcoin. So the book is called Resistance Money. It's published with Routledge, an academic press. We negotiated hard and got the paperback price down to $29.95. We had to fight a long, difficult fight to get this. But it's cheaper than most academic books, just cheap enough we think that normal people will buy it too, not just libraries. And we just really like it. We think it's a fun book that a lot of people will benefit from. So Resistance Money, you can find it at the website, which is easy enough. It's resistance.money. And I hope to see you there. And anybody watching or listening who goes to Bitcoin conferences or whatever, if any of us, the authors are there, come talk to us. We'd love to talk about anything about any of this. And Trent, that goes for you, of course, and Thomas.
Oh, yeah. Yeah, absolutely. I'm really looking forward to getting into that.
This has been a absolutely fascinating conversation here.
Thank you for listening to me talk about Bitcoin. It's my favorite thing to do, aside from metaphysics.
All right. Appreciate it.